Hello, my name is Tanya Bharadwaj. I drive thought leadership and content strategy at Nium. This is just one of the many webinar series that we're sort of hoping to bring your way in the course of the year. Today's, discussion topic, as you know, is what's next for fintech funding. I think you'll agree with me when I say that over the past few months, it's been very tough to sort of analyze the world, and that's because it's also very tough to develop a view of the world. What was sort of this environment, riddled with uncertainty in the last 3 months. Who's to say what it's going to be like in the next 3 months? So we thought, this would be a good starting point to bring on board, a star sort of panel for you and try and answer some of those questions. What's likely to be the next normal? What's likely to be the new normal? And as you can see, we've got, two sort of veteran, seasoned investors for you. I'm going to hand it over to your moderator for the next 1 hour. That's Rebecca Martin. Rebecca drives fintech strategy at the Monetary Authority of Singapore. And Becca, it's over to you.
Thanks so much, Tanya. Welcome everyone to this session on early stage fintech investing. So today we're going to cover some of the trends that we're seeing over COVID-19, but also some advice for founders around who's raising in this environment and how to raise. I'm Becca, as Tanya said. I'm from the Monetary Authority of Singapore, and I oversee the fintech investment portfolio for MAS. And I'll be moderating today. So please do post your questions in the chat or in the Q&A, and we'll do our best to get to them over the course of the hour. And thank you to Tanya and to Prajit and the Nium team for organizing and inviting us to this session. Let me introduce you to my victims for today. My first victim, Sheel. I first met in Vienna several years ago, and our paths have crossed many times since then, in Tokyo, in Hangzhou, in San Francisco, in London, and now on this global webinar. So if you don't know Sheel, he's a serial entrepreneur and early stage fintech investor. And having spent 5 years as general partner at 500 startup fintech funds, he now has set up his own fund, Better Tomorrow Ventures. So far, Sheel has made seed investments in 3 startups that have gone on to become unicorns. So there's no one better to spot and develop early stage talent. Welcome, Sheel, and good to see you again.
Thanks, great to see you, Rebecca.
Nice, and you're in San Francisco at the moment, so thank you for staying up late. As someone that's so used to traveling and spending your life on a plane, how's the pandemic been affecting your way of working?
Actually, I don't mind working from home. I've been fine. I do a lot via video anyway, or phone. And I've still been finding ways to get out and do adventures. So I went on a 3-week-long road trip with a friend. We got an RV and drove up the coast of California up to Seattle. So that was really fun. So still finding ways to get the adventure in, though not internationally, obviously.
Nice. I was hoping you were going to mention the music video with Justin Bieber, but maybe we'll come on to that at the end of the session.
Yeah.
My second victim is Amrish. After a career in financial services, Amrish co-founded Citrus Pay, which sold to NASA's fintech arm PayU in 2016 for a record 130 million, which at the time was the largest M&A fintech deal in India. He then went on to run PayU in India, and just this year joined Pine Labs as CEO, India's largest POS and merchant commerce platform, which coincided with Pine Labs raising a large round by MasterCard. So Amrish has now built and led 3 fintechs as founder and or CEO, each valued at more than $1 billion. And to top it off, Amrish is an active angel investor. So welcome, Amrish, and thank you for joining us.
Thanks. Thanks for having me here. Nium is a bit of a family for me, so happy to be here.
Nice. And you're obviously in Singapore, the same as me, so we're both very happy that we're in phase 2 at the moment. But how has the pandemic been affecting your way of working?
I mean, very difficult, right? Very, very difficult. I think the sooner we accept that this is difficult, I think the better. So, it's very unique because businesses seems to be changing like every 10 days, and hence direction keeps changing every 10 days. So, learning to accept change.
Good advice, I think, for the rest of the session. But let's start with how the funding landscape has changed over the last 6 months. So here in Singapore, for those of you here, you might have seen BCG's report that came out last week that tracks fintech fundraising through Singapore. and it pegged it at 650 million Sing dollars for the first half of the year. So that's over $500 million US dollars, and up on last year. So we've seen an increase in fintech fundraising. I think the first quarter was quite slow, but thanks to rounds like Nium's, we've topped that number for the second quarter, which is very positive for the future, I guess. Sheel, how does that compare to what you're seeing in the US? Can you talk me through the kind of fintech fundraising landscape over the last 6 months?
Yeah, I don't have the actual figures, but I think it's been really strong. And you know, these numbers are really driven by a few deals that are mega rounds, and that has continued to be the case. So a lot of, you know, Robinhood, I think most notably in this past quarter, but we've had a bunch of great rounds in the past 6 months or so. So fintech funding has gone, you know, continued to increase. I think there was a period at the beginning of COVID that everything was in flux. And so I would say March, April timeframe for a lot of us, we were really focused on working with our existing portfolio. So there wasn't as much time, you know, we were kind of assessing which companies need our help. So like spending a lot of time with the existing portfolios. For those of us that were fundraising, there was like a period of like, well, we don't know how big our fund is going to be. So all these things were in flux, and there was a period of 2 months where not as many deals got done, or prices were actually a little bit lower, particularly at later stages. Like some of my companies that were raising Series B and C rounds, those rounds were a little bit tougher because those investors had never done an investment without meeting people face to face, first of all. And two, they were looking at the public market comps. And at that time, the public market comps for these companies had fallen significantly, 30%. So they were saying, okay, if the public market comp has fallen, then you know the C round comp should also fall. So that was a tricky time. But then you have the stock market roaring back with a vengeance, at least in the US. And so now things are back to normal. You're still having incredibly overpriced rounds, in my opinion, at the seed stage. You know, I'm seeing rounds being done at a $20 million pre, you know, good team, good business opportunity, but still it's insane. I don't know how you make money at that price. So things have gotten crazy again.
Amrish, you sit on both sides of the fence there, both with angel investing, but also running a large organization that was very fortunate to get some funding in before we hit this kind of crisis period. Talk us through your first 90 days, I guess, your 100-day period at PineLabs now that you're settled in.
So, you know, it's been, as I said, it's been very interesting. So I've been in office all of 5 days before the lockdown. So I found it extremely difficult that, you know, I'm trying to build a relationship on Zoom. I think what can still work is if you're trying to get some work done on Zoom. Building relationship on Zoom is very tough. And in the first 90 days, you can still get away by asking a lot of questions. And that's what I did. Asked a lot of questions, understood the business, listened. But then after 90 days, you just feel like, okay, now time for action. And it's sometimes difficult to get into action and start executing without having built a long-term relationship with your colleagues. And I think I found that the most difficult in the last 3-4 months time. So that's one piece. I think the second piece, as I talk to you, you know, everybody says that change is the only constant. The problem with this pandemic is constant change also leads to chaos. And I actually feel that there's so much change which is happening literally by the week and the month. And let me give you an example, right? So we were fully ready to go out into the Indian market, go into the Middle Eastern market. And then you start to see almost like the tail end of the first wave still hanging around, affecting businesses. And then your plans have been put back for by a few months or by almost like a quarter. So I think how do you adopt to change and change on a weekly basis or monthly basis? I think is a very interesting thing.
Let's talk a bit about both of your investment thesis or your investment process over this period, and I'll come on to the audience question that's just come in. I've seen a lot of fintech investor decks over the last few months where they're applying for either public sector pots that have been made available or solidarity funds that have been put together by the private sector. And I've noticed that the first slide now is always the opportunity of COVID or the impact of COVID on that business model. Has your approach to investing changed? Are you weighting different factors differently now? Maybe start with you, Amrish.
Sure. First of all, I'm not half an expert on investing as Sheel is. So I do a lot of fund deals in terms of my angel investing. I invest anywhere from 50,000 to I think my largest investment is like about $1 million, and this is all as an angel investor, which I have done. So I do this more as fun for me to understand new businesses, new trends, new entrepreneurs, get close to their business, because I'm sure I'm going to learn something out of it. And because I do that, I don't try and go away from my core strength. So my core strength is around transaction. My core strength is around money movement, digital payments, fintech. So COVID, for example, has brought in some very specific opportunities. But the way I look at it is fintech has got accelerated, but the basics of fintech and the principles of fintech have remained exactly the same. So I stick with the same theory which I have had for the last 3 to 4 years time, or the thesis which I've had for the last 3 to 4 years time, which is if you can remain close to the transaction, there's a very high likelihood you'll be able to capture the revenue pools around the transaction. So if I see businesses close to a transaction, those are the kind of ones that I want to invest in. But look, every now and then I have a good friend of mine who's ready to launch a venture, and I end up funding this friend of mine. So nothing hard and fast. I've done about 25 deals till now.
Nice. Same question to you, Sheel. I think at the angel stage or the seed stage, the founder and the team that's building the business is extremely important. Are you weighting that differently over COVID? Are you looking for more experienced founders that have maybe dealt with a financial crisis before? Has it changed your perspective?
No, not really. So I'd say, so first of all, by way of what we look for, so I typically like to lead pre-seed and seed rounds. So what that looks like is about an average of $1 million check, really ranges from $500,000 to $1.5 million, but about an average of $1 million US. And typically leading the earliest round in fintech startups. And when I say fintech, we take a pretty broad view on what fintech is. So we sneak in a bunch of things that other people might not consider fintech. But to us, it's like if you're a hammer, everything looks like a nail. If you're a fintech investor, everything looks like a fintech company. And in terms of what we look for in founders, because we invest so early, like you said, Rebecca, it's really all about the founders that we care about most. And so what we look for is the same thing that everyone looks for. It's like a founder who can clearly articulate a vision and sell us on that vision. So like, am I buying into it? And if you can't clearly articulate it to me, then you won't be able to sell your future customers. You won't be able to sell your future investors. You won't be able to sell future employees. So that's the thing I look for most. And then it is a little bit different in that you don't get to meet the founder in person. But I have done many deals in the past where I hadn't met the founder in person already. So for me, it's less of a hurdle than I think it is for some other folks. But what I do differently than I did before is I do a lot more background references. So I've done 2 deals in a completely new post-COVID world. And in both of them, I probably talked to 10 or more references on the team. Just wanted to understand how they tick, because it feels like there's something like the people that I trust who know this team. And so I can ask them questions that I can't necessarily get at because I can't spend the time with them in person. Yeah. So that's one difference.
That makes a lot of sense. Amrish, have you made any investments since this kind of COVID pandemic has hit us?
I have. So I invested into a gold lending company in India. And as Pine Labs, we are very close to making an investment in Singapore and Malaysia, again, in fintechs. And 2 completely different approach. So for example, on the, in Pine Labs, the company that we've been looking to invest into, we couldn't get to meet the founders. We couldn't get to meet the team. We also don't know for sure how it's going to look post COVID. But then we felt comfortable that this is the bet to take, because who knows, coming out of COVID, this company might come out a lot better than what has been performing even before COVID and in the COVID period. So we've taken a very interesting bet where we are saying post COVID, this company might come out winners, and let's go in early and make the investment into that business now. We've not yet sort of completely closed it as such, but pretty much there in terms of investment. The gold company was much more of a thesis, which is in India, security for lending is going to become really important. And if you're the platform on which the consumer is buying gold, effectively you have access to the security and you can do a lot more with it. So with that thesis, I've invested into a couple of ex-Paytm guys who are starting up with a gold lending company, gold purchasing and gold lending.
Oh, they're competing with my people. I'm Marwari, so these are my people. Digitizing that.
You got to look at that, Sheel.
Yeah,
did that come up in your competitor analysis? Time to connect after this, I think, on that one.
Yeah.
You can't compete with a Marwari, so you got to just join them because they are the smarter ones.
Spoken like a diplomat. So if I'm a fintech founder, I've come up with a new business idea. Maybe I'm friends with Amrish, so I get my foot in the door for either investors. What advice would you be giving me over this period? Should I be seeking outside investment at this point? Is that a safe thing to do?
This is to Sheel or to me?
To both of you. You go first.
Sheel, why don't you? Okay, I go first. Okay, look, I would advise you that, and again, it's just me, right? So the way I look at it is that there are many areas in fintech where you don't change consumer behavior, and then there are many areas of fintech in where you're disrupting consumer behavior and almost goading the consumer to do a transaction in a completely different way. I actually find the later a lot more complex than the first part. So first of all, I'd advise you, which says that there is so much to be done in simple fintech. Focus on the simple fintech. In terms of raising money, look, I think there's access to some amazing capital out in the market. I'm not sitting here and advertising on behalf of Sequoia, but I just want to say that when you look at the Surge program that Sequoia has put together, some really nice capital being made available to Southeast Asian founders and Indian founders. But on the backs of that, we have at least 5 or 6 other new new VC firms which have come up with programs targeted towards small segment. And suddenly what you have is the whole YC model looks extremely old school to me, which is like, get $120,000 for 7%. I heard about another accelerator today, which gives 100K, takes back 30K and still asks for 10% ownership. I'll almost advise you, it says, don't go with some of these older programs. I think there are some very interesting new programs out there with some of the bigger VCs, which could be very attractive from a funding standpoint. So explore those. And I tell all my friends saying, explore those opportunities first before going into a classic accelerator or a boot camp.
Amrish, what are the ones that you like other than Sequoia Surge? Are there other ones that you recommend?
So, for example, Lightspeed has a program which Lightspeed is supporting. Matrix does something which is not necessarily in a structure, but Matrix is now going in one level lower in terms of helping founders, find their product market fit and getting them different exposure. So I like these 3 in general and what they are doing. Again, even below that, then there are folks like Aureus and Bloom Ventures, which have come up with smaller programs for early stage founders.
Yeah, makes total sense. That's great.
Do you think then that this has to be the new model for incubator accelerators? Because if we're not there physically, I think that's so much of the value is in the network you create there, the evening events that might be available for you, the connections that they're able to introduce you to. Do you basically, are you saying here that the VC accelerator model is much more successful than the kind of traditional accelerator or incubator model you would have seen before? Amrish, do you?
Oh yeah, sure. Yes, as I said, I do think that it is. I think it's got a lot more content to it, right? And maybe it's also because it's pretty new. So they've got to create the brand around it. They've got to create the hype associated to it, and hence they are right now all in. I would think that once it gets to its season number 7 or 10, it's just going to sound like a cookie cutter, and it's going to look pretty old school. Look, again, no comments about YC. They've done a phenomenal job over the last 5 years with their methodology and the platform, but it just looks a little bit old school to me now. And I do like what some of these new VCs are putting together.
Nice. I'll give you a break. There's actually a question that's coming from the audience to ask you to type in the names of some of those programs that you mentioned. So maybe you could do that while Sheel, I'll ask you about the way that fintech should be looking at structuring deals at that early stage. So there's a top question here about if a fintech doesn't want to give a valuation at this point, what are the alternate ways that they can look at funding?
Yeah, so a couple things, like in terms of types of funding, there's the standard equity round of funding, which is you name a valuation. There's typically a pre and post money valuation. Then there's convertible notes, in which you can sort of kick the valuation a little bit down the road, is the original theory of it. But in reality, what happens is you set a pre-money cap on the valuation, and if the company isn't, if the company isn't doing well, it doesn't really matter what the pre-money cap is. But if the company, because the company's probably not going to survive, but if the company does well, then the pre-money cap is effectively the same as an equity round. So depending, I don't really care that much personally which way the company chooses. It could either be a equity round or a convertible note. And if it's a convertible note, there's YC has a safe, simple agreement for future equity that works just fine. Outside of, I don't know if it was like, if the question was around what types of financings are available other than venture financing, was that the question?
Just about having to not set your current valuation. So I think you did it with the convertible note piece. Yeah, perfect. And I would say that for a lot of the programs that are in Southeast Asia at the moment, where there's solidarity funds that have been set up, the general structure is convertible notes, so that the aim is to provide bridge financing to some extent and not set valuations too low at this point. So hopefully that answers your question. I want to move on to an audience poll. So we have a poll that should be coming up onto your screen shortly about the verticals within financial services that are seeing the most growth over COVID and co-COVID, I should say. I keep saying post-pandemic, but I heard a good phrase yesterday, co-COVID into the future. So that should be coming up in front of you. Unfortunately, Sheel and Amrish, we can't actually vote on this poll, but I want to get your opinions while we wait for the audience to chime in. So you don't have to pick anyone on this list, but I want to get your perspective on the segments within fintech that you're most excited and most passionate about at the moment. Sheel, I'll start with you.
Yeah, sure. So I think, particularly in the US, the last decade of innovation in fintech has been largely bringing stuff that was offline online. So there was a bank, now it's online. There's a lender, now it's online. Then it's in an app, but largely the same stuff. I think a lot of the true innovation is yet to come. And for this greater stage of innovation, we need some of the building blocks. And that infrastructure layer is not yet there in the US, and it's not there in other parts of the world either. And Nium's actually a perfect example of that kind of company that is building stuff that other people can build on top of. And traditionally, there's been a big part of fintech has been distribution, particularly to consumers. But I think in the future, a lot of non-fintech companies that already have distribution and some data advantage will be offering financial services. And these infrastructure players will enable that. So I'm really excited to invest in that infrastructure layer.
Nice, infrastructure layer. How about you, Amrish?
I actually have a long list of it. First of all, let me talk about something which Sheel spoke about some time back, which is people are almost treating stock trading as gamification. So, or
Yeah.
rather,
Yeah.
games. So, stock trading came out very, very interesting. Sheel, sorry, I picked that up from you last time. But look, I actually feel there's a whole host of it, right? Which is anything online, insurance. I really don't think we're going to go talk to an insurance agent anymore if we can buy insurance online. Same goes for neo banking. Maybe this is the moment under the spotlight. Everybody had questions around neo banking. I just don't see myself or my uncle going to the branch anymore. Neo banking's time might be there today. Borderless payments. I think borderless payments is very, very interesting. Prajit and I talk a lot about borderless payments, and that's going to be very interesting because if commerce is going to go online, people are going to want to buy from anywhere in the world and move money to any part of the world. As the whole influencer segment grows through COVID, how do the influencer gets paid around the world? So borderless payment, according to me, is going to explode. And finally, something which is very close to what I do, I think contactless payments is going to become big. QR payments within that section is going to become very interesting. So, those are the areas which I would be watching closely.
Nice. Actually, so when you talk about infrastructure, Amrish, you've spoken a lot about the kind of payments infrastructure there that's required for that borderless piece. So is that what you're talking about too? Is it payments infrastructure or just across the board, identity, KYC?
It's all of the above. Yeah. Credit, identity, KYC, all of that stuff, and payments infrastructure. So I think all of it. And I totally agree with Amrish. I think, we're seeing branchless banking accelerating, which is definitely good for neobanks, and accelerating digital and mobile payments. NFC adoption is accelerating. All these things are great. The other thing that's interesting is actually on the insurance side. Insurance has been the category I've invested in most, and COVID has been a super accelerant for all of the companies. So for life insurance, people are thinking about death more than they ever were before, and they have time. They're at home. They're thinking, oh, like I'm here with my kids, and COVID is a problem. So life insurance sales have gone through the roof, and our companies in particular, because traditional life insurers, you have to go out and get a medical test. But our portfolio company, actually, you don't need to go get a medical test, so it's even safer. So that's been huge. Our auto insurers, the loss ratios look amazing because nobody's driving and people are at home, so they're shopping. Same thing with homeowners insurance. And like Amrish said, there's no other way to gamble right now. So everybody's trading, and that's been interesting. So the trading apps are doing incredible stuff. And a lot of what's something to watch if you haven't seen in the US is there are these networks. There's this Reddit group called Wall Street Bets. And there's this guy, Dave Portnoy, who has a Twitter channel, and he's popular on Twitter. These guys are just streaming their tweets or what they do all the time. And there's an insane number of young people who are just getting Robinhood accounts and trading that never traded before. And so this COVID time has brought a lot of folks into trading. And I think this is going to be a lasting thing. So I'm actually quite bullish on trading platforms in a way that I wasn't before.
Have you made any investments?
Sheel, what's the name that you said, the Twitter handle that I need to follow?
Yeah, the guy's name is Dave Portnoy.
Type it in the chat.
Yeah, I will.
Okay.
Although I almost don't want you guys to follow this guy, but he's so entertaining. Anyway, he came out of nowhere. So this guy, he had never traded before. And then he ended up so somebody wrote, he's the founder of Barstool Sports. He'd never traded before. Betting goes off the table, and he starts just streaming himself live, talking about stocks. And you can see him like learning how to trade, but he actually doesn't know what he's talking about at all, but he's highly entertaining. And he's brought a whole generation of people into stock trading. It's amazing.
It comes back to your point, Amrish, about how do you pay the influencers in a borderless payment network?
Correct.
Who's going to be the first? Who's the use case here? Nice.
Exactly.
All right, we'll move on from the poll. I think an interesting topic to look at is M&A activity and whether we'll start to see more of that going forward. So the BCG report I talked about earlier, about 200 mil of that 650 here in Singapore was due to M&A activity. You will have seen, if you're in this part of the world, that Grab and Gojek have had to lay off some of their staff, and we'll see more of that. So there's a lot of talent going and potentially opportunities for buying up early stage businesses. Do you think we'll see more M&A activity? And if you're speaking as a kind of early stage founder perspective, is that something I should be looking for now as an exit option? Either of you that wants to comment first.
I mean, it's. Go ahead, Amrish.
So I just could say, I think the next 3-4 months is going to be very interesting. Everybody thought that the first 3-4 months of COVID is going to be big for M&A. Actually, founders are the most resilient when it's the darkest. So when things are really, really bad, the founders get going, hold on to their businesses, work, on every possible dimension to hold on to their business. It's when things are supposedly better or supposedly good, and your business doesn't come back the way everybody else's businesses come back. That's when the founder tends to lose heart and then starts to look for some M&A activity. So I do think M&A over the next 3, 4, 5 months is going to be a lot more interesting. And I was pretty sure it's not going to happen in the first 3, 4 months of the COVID era.
Sheel, what's your perspective?
So there's been an insane amount of M&A in the US in this year. We had Visa buying Plaid $5 billion, Intuit buying Credit Karma $7 billion, Bill.com IPO'd, SoFi bought Galileo for over $1 billion, MasterCard bought Finicity for $1 billion. Just today, and so MasterCard bought Finicity last week for $1 billion. By the way, it was nearly, you didn't hear it from me, but it's nearly 50 times revenue. Insane. Empower Retirement bought Personal Capital just today for $1 billion. This is a robo-advisor with only $12 billion AUM. So what we're seeing is not at all what you'd expect in a recession. You're seeing insanely high prices being paid for these fintech products. And it's because there's so many potential acquirers that these things are getting bid up. And it's been gangbusters work for some of our friends in the investment banking world. And those are just like the new fintech companies. Then there are all these like traditional guys that got acquired in the US. The trading platform E-Trade got acquired. I think that was like $15 billion. So lots and lots of activity. And what that does is, because these valuations were so high, Finicity getting acquired for nearly 50 times revenue. If you have some sort of API product, you're thinking, man, I should get 50 times revenue. And it's driving valuations higher as well at later stages.
Amrish, I can see you nodding along to that comment. Do you think we suffer from the same thing in Southeast Asia and India and this side of the world?
I was actually doing a 50x the revenue of Pine Labs. I literally was.
Excellent.
Nice.
I hope you get it.
Yeah, thank you. Thanks, you.
Good luck. Let's take a breather from the pandemic. I feel like we've covered that in quite a big detail. Another piece of news that has massively impacted our industry in the last week is the story of Wirecard and the impact that that's had not just in Europe but globally. I'd love to hear your take on the current situation, but particularly how that's going to impact the broader fintech landscape. What are the knock-on effects that's going to happen now that that's kind of exploded? Amrish, I actually saw a tweet that you put out a couple of days ago on Wirecard, so you're my first victim for this question.
So, if I start to petition something to MAS, will MAS take this around to all the regulators in Asia? Just as a quick question to you.
I'm asking this question from my personal perspective, and I don't represent the views of MAS in asking this question.
Okay, yeah, sure. Look, and I'm being very serious about this. I think that what Wirecard used to do was super complex, right? They used to try and process payments in 80, 90, 100 countries, move money around 80, 90, 100 countries, provide risk, provide compliance, provide daily settlements. And I think it's a really, really complex part. And for a minute, let's assume everything is perfect in fine in Wirecard and there is no fraud out there. And let's make that starting assumption. I think what it highlights is that payments is not a commodity, and I'm not yet ready to say that payments is a commodity. I think payments is still extremely complex when it goes cross border, and the regulators and the government should actually ensure that companies which are in the payment space get enough MDR, enough money, and enough interchange in that transaction. I think the story has gone just way too long that payments is commoditized. It's not. I think it's very specific. And what could have happened in Wirecard is as businesses became very big, went into 80, 90, 100 countries, managing it became extremely complex and nobody could figure out how the whole is increasing and the whole has gone to 2 billion. Now forget 2 billion, right? Nobody allows a whole to go to something as big as 2 billion. So obviously the assumption is wrong. There's something fraudulent in Wirecard, I think the later is true that there was something fraudulent. However, it's very easy that when it comes to payments, remittances, some of these money movement businesses, errors happen and you have write-offs which happen in that business. So we should be aware of it and we should be cognizant that write-offs are things which happen there. But yes, you're absolutely right. Fintech has taken a blow. Definitely, fintech has got a black eye out of this whole Wirecard experience. It also is a reminder to founders that, hey, look, you got to sleep better in the night, so don't do things which you shouldn't be doing. Yes, so fintech has been hurt because of the whole Wirecard fiasco.
Sheel, what's your
It's
perspective?
interesting.
Do you agree?
Yeah, so it's funny. So obviously, being a fintech investor, I did have been following Wirecard, and for years we've kind of known this that there was fraudulent activity going on. So I'm surprised it took so long, but kudos to the folks who uncovered it. I'll say from a U.S. perspective, very few people in the U.S. know about Wirecard. And I don't think it really has any impact on fintech activity in the US. So for what it's worth, one sort of side note, we were talking earlier about trading and this like Dave Portnoy's gang. So one of the things they did 3 or 4 weeks ago is this Robinhood, Wall Street Bets, Dave Portnoy gang, they decided to buy a bunch of stock in Hertz. And they said, Hertz is going to come back. And so Hertz is a car rental company that's going through bankruptcy. So the stock was going to become insolvent and the stock was going to become worthless. But these guys, these retail investors, bought a ton of the stock. And then for a while, it was trading high again. And it had like 300% swings in a stock that was going to become that was going to become worthless. And I think they did something similar with Wirecard. So they have been buying Wirecard and the stock was up again for no reason. In Wirecard, Hertz, there was some speck of possibility it could come back. Wirecard, there's a bunch of senior debt and the way that German insolvency works is completely different. But these retail traders are doing crazy things.
Yeah, that's definitely true. That's a crazy story to hear about Hertz. And there's an audience question that's a bit of a follow-on from the Wirecard piece. And I will say that this is an audience question, not my own, and I won't answer this, but there's a question about regulators in Southeast Asia and how they're going to respond to the Wirecard saga, whether they'll make the kind of barriers to entry, the barriers to get regulated much harder for fintech. Do you think that could be a likely outcome, Amrish?
Look, I'm going to say this on this group. Regulators don't have a clue what goes on in payments. Regulators don't have a clue. Auditors don't have a clue. Payments is so complex that, to understand the movement of money and movement of a transaction across borders, it's very, very complex. So even if the regulator had the best interest to solve for this, I don't think so they would have caught it, because by the time you understand where the transaction is, it's already moved from your jurisdiction to somewhere else, and money is in some other country. It's very complex. So I think the regulators will want to understand more, and I think regulators have been on this path over the last 5 years' time. But to be fair, I don't believe that when it comes to borderless payments, regulators or even auditors understand how that works very well. It's once you're in the business for a good 6 months, 9 months time, only then you figure out how does it all come together.
I'm going to move swiftly on
I
from that
think there's a
topic.
payments component, but
Go on.
also there's just a general corporate governance issue, right? Like a lot of this stuff is not necessarily solved at the payments piece of it. It's a larger issue where they're falsifying accounts and all this other stuff. It does always surprise me that this is like, there's been so many major German corruption scandals, because like growing up, I always thought of Germans as being like so buttoned up and by the books. So there's some element of me that's like, whoa, this is a change anyway.
Yeah, changes your perspective, I guess. But we will move on from that topic to another quick audience poll, which is about the trends that were here before COVID-19 and the trends that will continue to remain in the longer term. So secular trends, we're not just talking about the pandemic now, big movement swings, I guess, in the financial services industry that most excite you and you'll be watching out for over the next year and or so. You should be able to see that now. Again, you can't vote, but Sheel, do you have a perspective on the trends that are impacting financial services the most?
Yeah, I'm just looking through the list of options. I think open platforms and open data are a big one. Big tech is a big one. Like if you look at the big tech companies here, Apple, Google, Amazon, Facebook, every single one of them is in financial services, actually in a pretty big way. Apple Card was the most successful credit card launch of all time. They partnered with Goldman Sachs here. An incredible product that millions of people are using, and it's a force to be reckoned with. Of course, they already were offering insurance products. Amazon has also announced a bunch of new banking products they're launching and insurance products. Facebook and Google both have payments, in India and elsewhere in the world. WhatsApp launched payments in Brazil and then got pulled back from a regulator. So I think big tech is probably the one that I'm probably most excited about. And then open platforms, I think as these governments, India's done a phenomenal job from a governmental perspective on building open platforms, enable other companies to proliferate, there'll be a huge amount of opportunity for companies to build on top of them. And unfortunately or fortunately, some of those companies that will win, if there's an open platform, sometimes all that matters is distribution. So that's what you see like in India, where the winners may end up being Google and Facebook.
What's your perspective, Amrish?
Yeah, I think Sheila's absolutely right. I just call that term as faster payments. So the whole concept around faster payments, around the alliance, is something which is here to stay. Singapore has Pay Now, India has UPI, Australia has its own one, and then you have UK also going in with the whole faster payments model. I think faster payments is the one which I'm most excited about. The way I would say this is, and again, Sheel alluded to it, as faster payments becomes a norm, it becomes a lot more easier for big platforms to come in and become participants in the whole fintech journey. So if I'm WhatsApp, I'm simply going to wait for countries to launch faster payments and then include those payment capabilities into my WhatsApp. And they've done that in Brazil, although they didn't do it with faster payments, they did it with cards. But I think what the Brazilian regulator is telling them is saying, why don't you do it with our version of faster payments? So that trend is here to last, which is faster payments, and then social commerce platforms adopting to faster payments to enable fintech. I think that's one of the most important trend going forward.
Nice. Let's see what the audience voted on. None of those were quite in the poll. Open platforms and open data. All right, Sheel, you
Cool.
got that one. And it's kind of the same with faster payments, right? It's almost the public utility that allows that to connect. I can see that we are being joined by a special guest. Breaking news that Prajit is joining us. Looks like he's just connecting. Whilst he's connecting, I do have a quick fire round that I want to ask you both. So before we let him introduce himself, and this is about the highs and lows of investments. I'm sure both of you have come across decks that have hit your desk and you thought their ideas are absolutely rubbish, thrown them off your desk and not given them a second thought, only to find that they've become extremely successful companies later down the line. So I'd like to hear your worst case of FOMO in terms of investments. So the investments that you missed out on, you just missed at the time and you've gone on to regret or see them succeed. Sheel, it looks like you're still thinking. So maybe Amrish, do you have an example you can share?
Oh yeah, I have a very interesting example. So in citrus payments, I decided that wallets are not going to do well. So I said, who's going to move money from a bank account to a wallet and then do a payment transaction? And I said that, look, I don't want to invest into building out a wallets platform. I took that decision in 2015, held Citrus extremely well. We sold Citrus to Naspers. We were all happy. And in 2020, I can promise you, I have been proved right that wallets just do not succeed. The only issue in this whole story is at 2014, there was another idiotic company called Paytm, which believed in wallets, get into wallets, got wronged in that approach. But they incidentally built a company of $16 billion. So I have to say that it's fine to be wrong, but you can still create a company which could be a lot more. So that was definitely.
But Amrish, would they have been wrong if not for UPI?
Interesting question that you asked, right? I still do think they would have been wrong,
Okay.
but for a completely different reason. So I think building trust would have been very difficult. So then they would have to wait for the virtual banking license to come through, they getting a virtual banking license, and then of course it becomes all legitimate. I've got to tell you about the second story. The second story is I go to meet this young guy, who somebody introduced me to, and he was building a remittances company. I said, look, if he says that he wants a valuation of 5 million, I'm going to put some money into his company. The upstart young guy comes across and says, no, I want a valuation of 15 million. I say, you idiot, your business is so small. Why am I going to pay you 15 million? That's Instagram and Prajit there. So that's another.
We'll get him to comment on that in a second. But first, Sheel, what's your story? Your FOMO?
Yeah, sure. The one that comes to mind immediately now that I think about it is Robinhood. So Robinhood's a free trading platform, most recently valued at $8 billion here in the US. These guys, they literally came to my house to pitch me, and I told them they were stupid. I was like, free trading app, that's been done before. And it has been. There are other ones in the US, and a friend of mine had started one. A friend of mine had started one that was a $1 trading app. And I said, what are you doing differently? Here are all the reasons this guy failed. It isn't about the price of the trade that's different. And what I completely missed about Robinhood was free trading is one piece of it. The other piece of it is the interface to do so. And what I thought was they were competing with the same guys, E-Trade Interactive Brokers, that people like myself used to trade. But actually, Robinhood brought a whole new generation of traders onto the platform that were never trading before. So they weren't competing with this, like what I saw as the race to the bottom. It was just bringing a whole new set of traders online. And it was because of mobile phone, their interface, their marketing, everything was different. And so I completely missed that one. I could have invested at a $4 million valuation. It's now 8-point-something billion. And instead I, got nothing for it. But you live and you learn.
Wow, that's a good story. What happened to your friend's business that was in a similar space?
Low dollar acquisition. Not that great.
Fair. All right. I think Pradit, now is the time to reveal yourself. And
I was in the listening mode. Hey, Sheel, Becca, Amrish, thanks so much for doing this. You guys are your stars. I really appreciate it. And I really enjoyed listening because you guys were talking as if it's like we were sitting on a lounge and having a beer. Thanks for this informal conversation, because most webinars have become like so serious faced, right? This was more fun. I really enjoyed this much more than the stand-up where, you know, it's like through the plan. So thanks, Becca. Thanks for doing this.
Nice, thanks, Brad. I think you need to address Amrish's point that he missed out on investing in you. What happened there?
You had too high expectations, Amrish.
I think I keep telling myself that the number of times we've been rejected, right, for investments is incredible. I have such a long list of rejections, and rejections only make you stronger in the world of startup investing. I think when I started running the company, I realized the fact that every time a VC used to say no, I used to go on a big drinking night. And then I suddenly realized that this is going to be very frequent. so I pulled back. I said, okay, this is not going to work. So then I think I became more realistic towards it. But, you know, raising capital is, I hate it as a founder. You know, there are some people who regale at it, right? There are some people who just enjoy the experience. And they are like sort of, you know, what next? Like, you know, once you raise the money, what do I do next, right? Should I go again raising? I hate the process. You know, I hate the process, the feeling of going through. It's a very tough one, right? I would hate to be what Sheel does, because some part of you has to be dispassionate, right? It's like you spend so much of time with the founder, etc., you know, and then suddenly you look at the thesis, you do all the maths, and then suddenly you can't invest. And you're like, hey, listen, you know, let it build out a bit rough, right? Like Amrish basically invests in businesses which are so early, right? And, you know, it's very difficult to disengage, right? And that's what I find, saying that, so I actually stayed away from investing largely because, you know, I'm scared of being so passionate about something and then not being able to work and then feeling emotionally broken about it. So hats off to you guys, how you guys make your investments.
You might stay away from investing, but you do like a bit of M&A activity. So you just have a different version of that.
It's a beautiful time to acquire businesses, right? Because unfortunately, I have to make this comment because MAS is not making acquiring companies in Singapore very easy, thanks to the grants. So with the amount of grants which have been put out, which is good, right? But my hopeful case would have been grants would have been put out to businesses, you know, who can last a bit or last a long. Now, basically, what has happened is that a business which was going to die in 3 months is got 6 months as a runway. So I think that's not. It's just it's the inevitable is going to hit anytime soon, right? But as a founder, if you think about it, okay, that extra 3 months is great. But you know, as I keep telling for all fintech founders, you know, Amrish, who I read for feedback, or Sheel's been saying the same thing. Great time to buy businesses, right? Because some of them will be very happy to sell because they are not seeing the maths around it. Some investors have given up, saying that, okay, let's not do this any further. But M&A traction, and I'm hoping for it, right? And Amrish, and you know, we would vehemently agree that Southeast Asia needs a lot of M&A. Like what Sheel has in the US, right? There are investors who are brave enough to buy businesses at 50 times of revenue. There is not many investors in Southeast Asia who can pony up and do that, right? And I think that's the big gap, right? So as a founder, I used to feel very difficult that, hey, why do businesses in the US and Europe get better valuation than I do? But in reality, there are exits there. Like Southeast Asia's biggest fintech exit is like $20 million, like $20, $30 million. Like that's pocket change from where Sheel comes from, right? India, I don't know, Amrish, Citrus would be the biggest fintech exit.
In terms of cash, yes. In terms of stock, I think free charge was bigger.
Free charge, correct.
Yeah.
Correct. But even that, you know, sorry, go on.
Was that all Snapdeal stock?
Yes.
So that
So that in a way, Citrus is still the biggest exit.
That's terrible. I could realize that.
But 4 years ago now.
Yes. but Southeast Asia needs M&A, right? Like I can't say that, some of the large players, platforms need to pony up cash. Otherwise there is no exit, right? Big businesses here, 5 billion, 10 billion, 12 billion. Even for them to exit, they need to buy something in this market, which I'm not seeing happening, right? Like 50, 60 million bucks. That's not going to elevate us at all. I don't know. What do you think, Sheel, Amrish? What do you think?
Sorry, what was the question?
So my view is, unless there are big exits in Southeast Asia, we won't get big investors.
Yeah, for sure. 100%. It's funny because like, obviously exits are a huge lagging indicator, right? But until you get the exits, you don't get the big investors. And actually I'm seeing it too, where just in the past 6 months, we talked about all these exits that had happened in fintech. And there were a lot of people, like I'm just wrapping up raising my fund now. And there were a lot of people that I met 6-9 months ago who didn't believe in fintech as a category. And I said, you're crazy. And then all these exits happened along the way. And then they came back to me and said, hey, actually fintech, okay, we believe you, fintech's a category. So you're right. It takes time. And for some people, they need to see those exits.
All right, we are coming very swiftly towards the end of the session. I can see that there's still quite a few questions unanswered, or I think we have gone through some as we went through. So perhaps the ones that haven't been addressed, we can circulate the answers afterwards, Tanya and Praj. I hope that's okay. But a quick fire round of kind of final advice that you would give to fintechs. Praj, yours would be look for M&A opportunities, clearly, but maybe Sheel, we'll start with you. What would your final advice be for founders over this period?
Make sure that you have, if you're going direct to consumer, make sure you have some distribution advantage. Otherwise, it's a sea of, competing with every other consumer fintech app. And ultimately, I don't want all of my VC capital going to Facebook. So you got to figure out your own distribution.
Nice. Amrish?
I think I'll repeat what I said, which is figure out on what are the challenges that you want to take. Fintech itself is a massive challenge. Focus on those areas which are simple, ready for disruption. Don't go out there into the jungles trying to come up with a new problem and solve for that new problem. And that's happening quite a bit in fintech. I think there are too many simple issues which needs to get digitized, and you could create a massive $300, $500 billion businesses. So focus on those areas.
Great. Praj, final words?
I think if someone says that, no, you can't do it, don't listen to them, right? I think opportunity is there, money is there, great advice is there. So, follow your conviction. Going back to what Sheel and Amrish were saying, that if it's something which you are convinced that you can make it a big business, just go and do it, right? There couldn't be a better time. COVID's allowed us to acquire talent, things which we could have never thought at the cost we can afford right now, right? So, don't let anyone say negativity affect you at all. And as founders, we'll get a lot of negativity.
Inspiring words to finish off this session. Thank you so much, everyone, for joining, and thank you to the panelists.
Thank you.
Thank you so much.
Thanks. See you. Bye-bye.
Good night, Sheel. Good night.
Thanks, Rebecca. Thanks so much.
Bye-bye.
Thanks, Sheel. Thanks, Rajit.
Big shout out to all our attendees as well. Like I said at the start, this is just our first installment. So we'll be back next month with another engaging and inspiring webinar. Thanks so much for logging in.